Hello and welcome to the Retail Economics webinar for the Outlook for Christmas 2021 and beyond. I'm Richard Lim, CEO of Retail Economics, and thank you so much for coming to join us today to talk about the retail sector. For those of you who may not be familiar with Retail Economics, we are an independent economics consultancy focused specifically on retail and consumer. So our aim is to put economic analysis, econometric modelling, forecasting and behavioural economics at the heart of the insight that we provide the industry. And before we kick off, I just want to mention that all of the slides will be available to all of the participants on the call. So there's no need to furiously scribble down any notes or take any screenshots or anything like that. Please do use the chat function to ask questions as we go along through the presentation, and I'll pick these up at the end. After the presentation, which will approximately last for about 20-25 minutes, we will then have a Q&A section hosted by Stephen Robertson, our chairman, where we'll run through some of the questions asked in chat, and we've already had some questions sent in by email as well. Also, just like to mention that anyone on the call will be invited to take part in a free trial with Retail Economics. It's simply our opportunity to show you guys what we do, the kind of insight that we provide the industry. We will put a link in the chat function now, so you can click on that, and please do make the most of our free trial. But anyway, the aim of today is to give you a view of how we see the retail sector at the moment. And of course, over the last few months, there's been an increasingly challenging backdrop for the wider economy and also the retail sector. So whether it's supply chain issues, labour shortages, rising inflation, softer consumer confidence, the government withdrawing some stimulative measures, the macroeconomic backdrop has become increasingly more complex over the last couple of months. And to put this into context, we're just going to go through our view of the industry, and I'm just going to share my screen now to take you through some of those trends. But of course, COVID-19, I just want to take a brief look back at the last 12 months. COVID-19 has fundamentally altered the way that we live, the way that we work, the way that we communicate, and of course, the way we shop. What we saw over the last 12 months or so is three distinctive trends that have developed. Firstly, of course, we saw a channel shift, and that was a seismic shift towards online, where the proportion of online sales grew significantly, but actually it was a wider shift, a wider digital shift that impacted the whole of the customer journey, from the way that we discovered goods right through to the way that we bought, ordered our goods, ordered fulfillment, tracked returns. But there's a much wider digital impact there. But there's also been a channel shift in terms of physical retail too. Retail parks have been defensive, more defensive than other parts of the sector, whereas city centres and shopping centres have been harder hit. We've also seen a displacement in spending. So cancelled holidays, less commuting, fewer nights out have had a significant impact on retail, hospitality and leisure. And we've seen a huge shift in spending away from those parts of the economy to the benefit of some parts of retail, particularly home. And also we've seen a significant rise in saving rates as well. And finally, lifestyle changes. And the big one for me in terms of retail is that is the change in the labour market and more working from home. And actually some of the research that we've done shows that that cohort of consumers, those ones that are working more from home, have really embraced online. There's been a real significant and permanent shift in the way that they interact with retailers and the way that they're ordering products. The impact of these trends has seen an irreversible shift towards online. And this first graph is just a simple demonstration, a simple visualization of average weekly sales across the retail sector over the last few years, split by store-based sales and online sales. And as you can see here in the blue, store-based sales, during periods of lockdown, we saw a significant drop-off in store-based sales, as you'd expect. In the first lockdown, we saw store-based sales fall by almost 30% year on year. And if you break that down just for non-food, we saw a more significant fall of about 50% year on year. For many customers, that lockdown, during those lockdown periods, it really necessitated a shift towards online. It exposed people to new customer journeys, and people broke down those initial barriers of setting up online accounts, entering payment details, and also in some cases, overcoming issues of trust. And what our research found was actually the longer that these disruptions went on for, and as we had subsequent periods of lockdown, that shift towards online became even stickier. And that was particularly for areas around homewares, electricals, apparel, and for food. So as a proportion of total sales, online has seen a step change. It went from around 19% in 2019 to 28% in 2020, and it's now settled around 26%. A lot of that has been driven by consumer adoption. So we've had this new wave of online shoppers. Our research actually shows that there's about 40% of shoppers that have shopped online for retail products for the first time that previously they've only ever shopped for in store. But also there's been a supply boost as well. During lockdowns, collectively, billions of pounds have been invested in the online ecosystem. So this goes from website analytics to digital marketing to automating warehouse distribution, and also the capacity of the courier network. But essentially, throughout the industry, the online proposition has been elevated over that period, and the online space is more competitive now than ever before. And what we saw emerge in terms of consumer perspective were four distinctive cohorts of consumers. What we called unfazed was essentially those consumers that had that keep calm, carry on mentality. There was about 36% of consumers who essentially said that they were unfazed by the impact of the pandemic, and it didn't really impact their spending behavior. We had 27% that we called reverters. These are consumers that said that the pandemic had some kind of impact on their spending habits, but they would revert to previous shopping habits once the impact of the pandemic had gone away. The third cohort of consumers were part shifters. And what this was that the consumers said that there would be a permanent change across some aspects of their shopping, but not so much on other aspects. And then we saw 18%, almost 1 in 5 consumers that said there has been a fundamental impact in the way they'd shopped. There would be a permanent change across the majority of their shopping. And actually, if you add up some of those that had a permanent change and some of those that said that there would be a permanent change across some of their shopping behavior, you've almost got a third of consumers that said that there would be some kind of permanent change in the way they shopped in some part. And actually, if you take that cohort of consumers and you look at those that said that there will be a permanent impact on the way they shop, it's all about shopping more online. And actually what this graph demonstrates, a piece of work that we did with NatWest earlier in the year that showed that actually those consumers driving that change are typically middle-aged consumers, kind of millennials, but also there's a significant difference between the most affluent and the least affluent households, where you can see the most affluent households, which you can see by the blue dots, are really is really that group that's driving that shift towards online. The question, of course, that everyone is asking themselves is whether or not the impact of the pandemic will persist in terms of the shopping behaviours beyond the pandemic, and when the pandemic hopefully soon kind of falls away. Another piece of research, and some of our research goes to answer those questions. Of course, there are many factors that affect this. It depends on age, it depends on online penetration, it depends on price point and whether it's luxury or discounts, whether it's big ticket purchases. We did another piece of research with A&M that showed that the areas that we expect that behaviour to be sticky is around apparel, homewares, and electricals the most. These are the categories within retail where consumers really seem to have embraced that shift towards online, and they expect to do so even after the pandemic, the impact of the pandemic goes away. The shift towards online, of course, is really important to think about the shift towards online, not just being the point of purchase, but actually it's the shift of, it's the impact of digital across the entire customer journey. And what's really important is that the battle for consumers' attentions are increasingly being fought online. So whether it's Instagram, Facebook, TikTok, Snapchat, the way that consumers are discovering brands is increasingly online. Retailers and brands are fighting for consumers' attentions online. And in many ways, these big digital platforms are becoming the landlords of the digital environment. But particularly for online retailers who spend a disproportionate amount of their operating expense on digital marketing, this space has become much, much more competitive. And it's pushing up the cost per acquisition of customers, and it's rebalancing the economics of online as well. So as we approach Christmas, against all of this backdrop of consumer behavioural shifts and consumer behavioural trends, the industry is also facing one of the most serious headwinds from the macro environment too. So over the last few months, the economy has up until the last few months, the economy may have been seen to have outperformed our expectations. It bounced back stronger than expected. The size of the economy has almost returned to pre-pandemic levels. Unemployment is falling, although the number of people in work is still below where it was before the pandemic. But really importantly, the vaccine rollout has been successful, and it's helping spending, jobs, and incomes recover from the impact of COVID-19. But there are some serious issues around supply chains. It's been a key concern for the industry, and for the UK specifically, we're still adjusting to the impacts of Brexit, and also the combined impacts of the pandemic and the impact that that's had on the labour market is continuing to disrupt supply chains. And what this graph shows is that retailers are still struggling to access the goods that they need. This is data from the CBI, and it just shows a balance between expected sales and inventory. And you can see here that it was only a couple of months ago that this index fell to a record low level, the lowest level since 1983. But essentially, the volume of sales compared to the volume of stock compared to expected sales is low. There isn't necessarily an issue previously with levels of demand. This is a supply side issue. Separate data also from the OECD shows that the inventory levels for manufactured finished products is also at a 5-year low. So there is a significant issue around trying to access the goods that they need. And if you focus further down the supply chain, there's also significant pressures that are mounting from the cost, raw material costs and commodity costs. So I've just shown some data here from the IMF showing a range of different commodity costs, whether that's from cotton, fine wool, sugar. But the bottom right chart shows that the basket of all commodities shows that there's significant inflationary pressure and significant pressure in the pipeline. In addition to this, retailers and brands are also facing shipping costs that until recently hit a 10-year high. They have since fallen quite sharply, but a lot of that pressure is still feeding through the supply chain and will continue to work its way through to consumers. And also shipping container costs are also at historically high levels. I was only having a conversation last week with one of our clients, and essentially they said that a container that they shipped from China last year cost them about £3,000 to get into the UK, though that cost has now risen to £10,000. And even when products land in Europe or the UK, the cost of transportation is also rising significantly as well. So you can see on this graph, on a year-on-year comparison, the cost of haulage is up by around 33%, and the cost of couriers is up by around 15%. So there's a cocktail of rising pressures, that is rising operating costs for retailers, that has really bumped up over the last 12 months or so. And this is squeezing margins, and we're seeing this filter through to consumers. So what this graph shows, really simply, is three different inflation rates. You've got inflation rates faced by manufacturers in the blue line, you've got inflation rates faced by retailers in the orange line, and then you've got inflation rates faced by consumers in the red line. And given that there's a lagged impact here, so as commodity prices rise, and that puts pressure on manufacturers, they feed then that through to a certain extent to retailers, and then some of that is then passed on consumers. There's a lagged impact. And so from a consumer perspective, what we're seeing really is the thin end of the inflationary wedge. Inflation jumped to 4.2% last month with data just released yesterday. And we suspect that it could hit 5% by the end of the year. This is really affecting consumer confidence. And what we've got here is data from our own retail economics shopper sentiment survey. And you can see here, the question we ask is, which are your major concerns that you are facing at the moment? And you can see here that 33% of consumers put inflation as their biggest concern at the moment, outweighing concerns around COVID-19. Petrol, for example, is one of the most visible impacts of inflation. It's one of those areas that are really visible for consumers, and it often acts as a catalyst for consumers to cut back on spending elsewhere. The average cost of filling up your tank for an average car was £66 last year. That's risen to £80 today. And if you take into account inflation expectations and tax rises that we're expecting through, for example, the national insurance hike that will come about next year, but in combination, those two factors could see the average household see an additional £1,800 to £2,000 additional expenses come through for the year for 2022. That's really hit consumer confidence pretty hard. And as you can see here, this is data from GfK, which shows consumer confidence has nosedived over the last couple of months. It's now at levels around about at the beginning of this year when we were still in lockdown. A lot of that pessimism is being driven by fears around the outlook for the economy, and also fears around personal finances. And to put it really simply, the prospects of consumer spending over Christmas are really driven by two main factors. It's driven by how much households have left at the end of the month in run up to Christmas after they've paid for all of their essentials. And secondly, how willing they are to spend it. And both of these are under significant pressure. There is a silver lining to this, however, and actually consumers have acquired a considerable amount of savings over the last few months. Going back to some of those behavioural changes, we've had to cancel holidays, we've socialised less, we've done less commuting. The Bank of England actually estimate that households are sitting on top of an additional £250 billion worth of savings. So some of these savings have been used to pay down debt. Some of these savings have been used to move house and also pay down mortgages. But essentially, households' balance sheets are in a much healthier position than they were previous to the pandemic. So providing that this inflationary burst is transitionary in nature, then actually, hopefully, we can avoid some of the long-term impacts of rising inflation. But nevertheless, inflation is going to be a hit to consumers, consumer confidence and consumer spending, and it's going to impact the least affluent households disproportionately. And given the undercurrent of these behavioural changes that I've already been talking about, we're likely to see a polarisation within the retail sector between digital and physical, and also some of those areas of spending that are really focused on the least affluent households. The actual reading of trading performance over Christmas is going to be very tricky this year for a number of reasons, but mostly because of annual comparisons. If you take Black Friday as an example, then this time last year, Black Friday essentially turned into Black November. There were discounts running from the end of October right through November, and of course that was much more of an online event. And if you look at if you look fast forward to this year, Black Friday is a much more kind of muted event. If you look at Google Trends data, the number of people searching for Black Friday details is about half the level it was this time last year. And also last November, we were in the middle of a national lockdown, and there was a huge shift towards online. Non-essential retailers were forced to shut, some of their trade went online, but we also saw a kind of a displacement between spending that would have taken place in some of those non-essential retail outlets shifting to essential retail outlets, for example, supermarkets. And also in December, we had further restrictions on social gatherings, again, that will make those annual comparisons quite tricky. So understanding and interpreting how those trends are going to differ for this year and how we're going to unpick that is going to be quite challenging. But the strength of sales is just one half of the equation. The combination of rising costs, a softer consumer outlook is going to put immense pressure on profitability across the sector. And while many retailers will try to protect and gain market share, it's likely to be at the expense of margins. And we're already in an environment where profit margins are already under pressure. If you look at the top 150 retailers in the UK, you can see here on this chart that pre-tax profit margins have been under pressure and have essentially halved over the last 5 years. The most significant challenge will be on those retailers that have an expansive store estate. The shift towards online will leave many retailers with an operating cost base that is disproportionately weighted to their physical channel. But at the same time, variable costs will be rising as a greater proportion of their sales move online, which is going to squeeze margins even further. And actually, that shift towards online is going to go to a part of the market, a part of the online market that is already run off of wafer-thin margins. And you can see here what we've done is we've just plotted a universe of pure online retailers across Europe, actually. And what this shows is that they are run on significantly narrower margins than the whole of the industry. And as we see this shift towards online, that will have an impact on total margins. What we expect going forwards is that pre-tax profit margins will come under further pressure because of this shift towards online. And so what we forecast is that pre-tax profit margins will come under further pressure because of the COVID-19 induced shift towards online. The retail sector will react in a number of different ways. Firstly, I think we will go through a period of scale. We will go through a period of retailers looking to enhance their scale, and some of this will be done through consolidation and partnerships. We've already seen some interesting partnerships over the last couple of years where you might not expect. An example might be that Next partnered with Morrison's, where you can now where Next were putting distribution hubs up in Morrison's car parks. There's been other partnerships that formed further down the supply chain, for example, Boohoo and Clipper Logistics. But we're likely to see other partnerships emerge as retailers try to squeeze greater efficiencies out of their operations. I think secondly, we're going to see the repurposing of stores as well, and turning these into social places. But the role of the store is likely to emerge, is likely to evolve, likely to be more seen as as a place to build brand, as a marketing expense for retailers, but also really merging physical and digital together. I think thirdly, one area that we'd like to see evolve very quickly is around supply chains and logistics. And finally, I think we're going to see direct to consumer become a much, much bigger part, or a much more disruptive part of the retail sector. So while there's lots of challenges for the retail sector at the moment, there's lots of opportunities as well. We've seen a number of different retailers that have really embraced those changes, pivoted their business models, put digital at the heart of their businesses to try to really leverage these opportunities. So I hope that you found some of that insightful. Like I said, all of these slides will be available for everyone on the call afterwards. Here's just a few examples of some of the clients that we work with currently. You'll be in good company if you take out a trial and decide to come along on the journey with us. For those of you who are not connected with me on LinkedIn, please do connect with me on LinkedIn. Be more than happy to take that conversation further.
Rich, that was wonderful. Thank you very much.
Thank you, Stephen.
Can I just say thank you to Rich there? That was really helpful. The slides will be available to everyone participating today. But also, please jump on the chat and ask some questions. We don't get an opportunity every day to speak to someone like Rich, who has such a broad grasp of what's going on, and an even better contact with what the retail numbers and what's going on behind the scenes. So dive in, ask questions. He's not embarrassed by anything, so get stuck in. But let me start, and like any good retailer, let's start with the customer, I think, Rich. And I'd just like to explore this whole area. You put that shift online, and you very helpfully showed us that was different by sector and by demographic. I wonder if you could just talk us through a bit more about that customer journey and how it's changing. And also, perhaps, I was really interested by the affluence of the customer and their responsiveness. And could you just give us your thoughts about how that will evolve over the relatively short-term future?
Sure. Thanks, Stephen. So I think one of the key questions that we've been asked time and time again is around the impact of the pandemic and where we will see those permanent changes. And I think there's a couple of reasons why certain verticals within retail will see that change. A lot of it is to do with capacity for those individual retailers. So a lot of them have the flexibility in their models to boost capacity seamlessly. But also there's acceptance by consumers as well. It's an area that they've already shopped in before, and they can go back and experience that again. I think one of the big changes, and I picked up on this on one of my earlier points, is that we've had a significant change in the labour market. There's a huge proportion of us now that those of us that can anyway are working more from home. And actually some of the research that we've got coming up, so I can't spoil it now, but some of the research that we've got coming up really just focuses on that cohort of consumers that are working from home more. And actually they're willing to, what we've seen is they're much more willing to embrace online. And they're much more likely as well to have taken those shifts in behaviour on a permanent basis. And also, there's a correlation here as well between those consumers that can work from home and those consumers also on from a kind of a higher affluence group as well. And so lots of moving parts, but there's that kind of general direction in travel, and the working from home I think is a big factor here.
And I guess we're going to see winners and losers arising just because Some retailers will understand their customer journey better than the others. And as ever, it's going to be the agility of retailers to respond to that by individual demographic that are going to create results for some people and losses for others. Very good. Can I just move on and let's be a bit topical here. We've just seen COP26 conclude and very emotive it has been too. But trying to put kind of our very commercial hat on as retailers, do we see any evidence that the consumer is willing to pay a premium for ESG type products? Are sustainable claims, environmental claims, going to become a fierce area of combat for retailers? Or are retailers going to privately say, well, look, just as long as we don't put our foot in a puddle, actually, we're not going to lead on this? Do we think the consumer is really going to come out now and say, we demand sustainable goods on the shelf?
Yeah, I think the first thing to say is that there is an aspect here where this is actually it's a behavioural economics concept, but there's a gap here between intentions and behaviours. And actually, while consumers have the best intentions in the world around sustainability, whether or not that is matched by their behaviours is something different, and whether or not they will pay for it, I think, is still highly questionable. And so what we have seen in our research is that there are consumers who say that they are willing to pay for sustainably produced products, but it's a pretty low figure. Although we have seen that figure creeping up over the last few years. I think the other thing is just that while there is this kind of like attention, while there is this kind of gap between people's intentions and behaviour, I think that gap is definitely narrowing has been narrowing over the last kind of few years. But I think from a consumer perspective, it's almost like consumers have a minimum expectation of retailers. They have a minimum expectation that they should be taking sustainability seriously. They should have a strategy in place to try to reduce carbon emissions. So while I think it will be a point of differentiation in terms of where consumers decide to where they will vote with their wallets, I think that the real risk for retailers is that those that don't take it seriously will be exposed, and those consumers then given that they have a minimum level of expectation, those consumers will essentially boycott the retailers that don't take this seriously. And so I think there's a real reputational damage for those brands that don't take sustainability seriously.
Yeah, good point. Although without naming names, I think we've seen a few examples of retailers that perhaps have been apparently disrespectful to sustainability, employment rights, etc. And yet, when the results roll around, it does seem their sales continue to power ahead. So it is going to be interesting to see if perhaps the recent conference has been a pivot point, or whether we'll continue to say more of the same. Certainly, I think that your point at the beginning of, and I'm going to paraphrase, perhaps unwisely, but don't necessarily trust what the person in the street says to the person with a clipboard about their beliefs, because it may not translate immediately into their purchasing behaviours. So, yeah, I think that's a very good watch out for us. And talking of watch outs, we've had a few questions coming in, and thank you, keep them coming. And I hope I paraphrase this question correctly, but talking about supply chain and the issues, you put up some, I thought, absolutely fascinating charts. You put that chart up about the inventory versus sales, which was quite extraordinary, and the shipping costs. I think the question for me is, are we going to see, as a response to that and the other uncertainties in the world, perhaps geopolitical uncertainty, are we going to see shorter supply chains? Are we going to see indeed onshoring is I don't know, apparel manufacture maybe going to land back in the UK? We've seen some examples of that. Maybe Europe is going to benefit from some of these uncertainties and some of these costs. What are you seeing, Rich?
I think one thing that's really emerged out of the pandemic is that there's been an immense focus on the fragility of supply chains. And actually what we saw is that supply chains are only as strong as their weakest link. And the more complex the supply chain, the more they have a greater exposure to risk. And so we did a piece of work actually with A&M last year, just looking at supply chains, looking at the fragility of supply chains, and we interviewed a number of different retailers. I think it covered over 100 billion pounds worth of sales, and the general trend that we've seen is that the retailers are looking to diversify their supply chains. They're looking to shorten their supply chains. They're looking to diversify the supplying countries that they're working with. And there is certainly a trend towards nearshoring, onshoring, and reshoring for some products. I think there's and twofold. A lot of this is being driven by having just more security in supply chains, but then there's also the ESG and sustainability agenda here as well, where they have to take greater responsibility for supply chains. They have to demand greater transparency in terms of carbon emissions through supply chains. And actually, I think there is a general kind of shift to try to shorten supply chains to have some impact on carbon emissions as well.
And I think there should be some other benefits of shorter supply chain, which hopefully you can exercise just in time, supply more effectively, and hopefully rates of innovation and overall agility of a retailer should increase. And I think it might be a very good example where the logistics team are shortening supply chains and the commercial team for one reason, but need to look more broadly to say, okay, if we are going to pick up the perhaps enhanced costs of a shorter supply chain, make sure we pick up all the other benefits that are available through shorter supply chain. I'm sure the smart retailers will make sure they're really wringing the towel on that issue. Okay, can I move on to a question that's just come in, which just goes back a little bit to the ESG conversation. The question is it possible that the high income households with greater disposable income might be more sensitive to ESG, whereas the lower income households will continue to be price sensitive and by implication, therefore, very resistant to worrying about green issues?
Yeah, I would agree with the general sentiment of that. And again, we have seen evidence where higher income households are prepared to pay a bit more to source from to buy from sustainable retailers or sustainable brands. That's certainly evidence of that. But I think the general expectation here is from consumers is it's not their responsibility to ensure that carbon emissions are reduced from a buying from a retailer perspective. So if you ask them, one of the pieces of research we did was just to ask consumers who was responsible for the reduction in carbon emissions. Was it consumer behaviour? Was it government regulation? Was it the retailer? And maybe unsurprisingly, but consumers felt that they weren't responsible for it. It should be driven by government regulation. It should really be driven by retailers and brands and manufacturers' own practices. It's interesting. I saw an interview with Ken Murphy quite recently, and I think his sentiment or his comments was essentially that that consumers do not believe that they should have to pay for sustainability, and this is an area that the retailers will have to absorb amongst keeping prices low and keeping prices low for consumers, particularly in food, and of course, given that we are blessed with a fiercely competitive sector.
No, very good point. Very good point. In fact, let's just continue with that thought about profitability. You talked about the very thin margins. For what used to be called multi-channel retailers, an expression I see has died out recently, it must be increasingly difficult to make sure that you're estimating the true profitability of your various routes to market wisely. And getting the balance right. Now, clearly the consumer will be making choices, but the retailer needs to make very sure that as perhaps their online proportion grows, that their understanding of the profitability by route to market is well understood and wisely costed.
Yeah, and that's incredibly difficult, especially because the customer journey has become so much more complicated. It's challenging for retailers to really, truly understand the cost of online when consumers bounce unconsciously between physical and digital realms, discovering things online, seeing things in store, ordering it on their mobile on the way home from a price comparison after going to a price comparison site. That much more complex customer journey makes it really, really difficult for retailers to isolate the true cost of online. And actually, I think this kind of feeds into a wider point of it becoming a much more complicated issue when the purpose of stores is changing and evolving really rapidly. So, previously a store might have its own, be seen as a profit and loss function on its own, and if it's making profit, great, and if it's not, let's close that store. But increasingly stores are seen as a marketing expense. It's a way to build brand. It's a way to try to merge physical and digital together, and it's a way to build experiences to promote loyalty, to try to drive sustainable levels of footfall, to try to enhance the lifetime value of the customer. But whether or not they purchase in the store or they purchase online, is becoming increasingly meaningless, because it's one one holistic journey that merges physical and digital together.
Thank you. Yeah, very good point. Very good point. We've got a question here. We've got a few questions here actually about people. And I guess for the people in the room today, I see in the businesses I'm involved with, the retailers, that there is an absolute surging demand for great people in what used to be called head office roles, particularly digital, tech, IT people. But I also see somebody's given us a question that said, we have seen little increase wage rates. Are we likely to enter a period of wage inflation that will inevitably impact prices and just add to the supply chain impact that you've just been discussing?
I think it's, again, many different moving parts in terms of what's driving inflation, whether it's coming from supply chain disruptions or labour shortages or exchange rate impacts. So there's not kind of like one factor, lots of factors with varying influence. But I think quite clearly what the government has outlined and what we're seeing with private businesses is that we are moving towards a higher wage economy. What that will mean is inevitably that some of these, this is going to boost operating costs for retailers. If you look at a retailer's operating cost base, then people and stores are the two most expensive elements to that. Compromises more than 50% of operating costs for most retailers. So when we've seen successive rises in national living wage, national minimum wage, You have other things like the apprenticeship levy, but also that drive behind a drive behind higher wages. It's inevitable that this will have some impact on inflation on inflation in the long run. I think what is also interesting though is that we're also for the industry, we're also reaching this point where automation, technology, robotics, to a certain extent, kind of machine learning, AI, is also getting to a tipping point where a lot of these technologies become commercially viable when labour costs reach a certain point. So I think, across part of the industry, whether that's kind of shop floor, whether that's warehouse staff, whether that's logistics and drivers, there will be that point where actually technology will get to a point where actually it's commercially viable to invest in these types of technologies because labour has increased. So across the industry, we have an industry that employs around 3 million workers, which is the largest private sector employer in the economy. Really important, but we will see fewer workers in the retail sector. I think that's inevitable, but I think the jobs that will be left will be higher skilled and higher paid.
Indeed, and I think I'd go a bit further actually and say that I've spent 6 years on the board of one of the leading UK retail logistics businesses, and it's been really interesting to witness on that board that retail clients, for them, were slightly nervous about introducing robotics and wondering whether they were trying to get too far ahead of technology. And bit by bit, that changed remarkably as we saw shifts in the labour market, and I think will have accelerated again. And happily, that happens at the same time that the cost and reliability of those robotics is dropping. So I think there will be a revolution on that front as well. And I suspect that revolution won't just stay in those warehouses. It will also get through to stores as well. So we will see. Can I stick with the topic, or picking up the question of inflation? One of the questions that have come through has picked up this question of the Bank of England have said that it's a blip, it's temporary. The question is, do you agree with the idea that inflation is temporary? I am not convinced supply chain cost pressures will prove short-lived, plus the tightness of the labour market you already touched on. So the question is, has retail economics got a view on where inflation is going to go? I see that labour rates across the entire country, this is not just retail, but including bonuses, pay went up 6% year on year, according to ONS data this week. So, there is real pressure there. So where's your forecast? You talked about 5%. The USA is already at 6%. Where do you think this is going to go? And the question is about how long will it last?
Yeah. So I think we've got a lot longer in terms of inflation's got a lot longer to a lot further to go. So I think that we will hit 5%, whether it's kind of towards the end of this year or early next year. I think so much of this is dependent on supply chains and whether or not we see a kind of a rebound in the reorganization of supply chains and whether we see the flow of goods get back towards what we would normally expect. But I do think that we are seeing some evidence of that. So if you look at a lot of some of the charts that I showed earlier around shipping costs that have dramatically fallen over the last couple of months, haulage costs have fallen back a little bit. A lot of the commodity costs that we look at seem to have reached a peak and are falling back fairly quickly. I think, I do think that the inflation. I'm more in the camp that inflation will be kind of short-lived rather than a persistent kind of era of higher inflation that's been driven by raising higher wages and a kind of an inflationary wage spiral. But of course, lots of moving parts, lots of uncertainty. But yeah, I'd say my comments will probably echo those of the Bank of England at the moment. But certainly the mood music from the Bank of England has changed over the last 3 months, from one where long-term inflation of 2% was still on target within 2 years, and that shifted to more concern over persistent inflation caused by numerous factors, and actually the prospects of inflation rate, the prospects of an interest rate hike, whether we've passed the end of this year, but whether that will come around early next year as well, which I think is highly likely.
Which of course will knock on into the cost of mortgages, and presumably won't actually be very good for consumer confidence, because personal finance confidence, if your mortgage is going up, you're going to feel more nervous, more defensive.
Absolutely. Yeah, I think there's two sides here. I think there's the reality of the impact that a 0.25 percentage point rise from historic low levels will actually have in terms of the erosion of spending power, but actually just the notion of rising interest rates will affect consumer confidence, and consumers will feel like they have to cut back and budget in other areas.
Can I just take you to the biggest single sector in retail in the UK is, of course, the food industry, the grocery sector. You've talked about the online shift, and I guess if we go back 10 years, food online was 3 or 4%. I remember talking to Justin King, who at the time was running Sainsbury, who had very little warmth for the online revolution in terms of home delivery, etc. What's your view now? Because we've just been through that rapid change in increased penetration for online grocery, and now we're seeing what appears to be another massive change with the plethora of rapid delivery services, both startups as well as people like Deliveroo being very light on their feet and saying, actually, I think we can help here, and they become a big vector for delivery. What's your view overall on grocery?
Yeah, no, you're right, Stephen. And what we've seen is this huge shift towards online caused by the pandemic. And pre-pandemic, only 18 months ago, or maybe a bit longer, but pre-pandemic, proportion of online food sales was about 5%. I think it peaked at about 13%, but it's resting around 10% now. So it's more than doubled over the last 18 months or so. And actually, if you look at the online sales as one channel, food accounts for more than half of it now. So half of all of online transactions is coming from food. So yes, it's an enormous part of e-commerce in the UK. I think that it's a fascinating space. It really is a fascinating space, because there are so many different retailers that have different business models in terms of getting orders to people's front doors. And you've got some retailers that are using dark stores. You've got obviously Ocado that are highly sophisticated using robotics, and you've got other retailers where everyone's familiar with kind of colleagues, retail colleagues that are walking up and down and packing online deliveries as you're walking around doing your shopping. So lots of different models. But I think one of the key things here is that there's a tipping point as well. And online grocery had to reach a certain point to make it commercially viable for retailers. I think that tipping point was it was kind of a piece of research that we were looking at, is the average transaction value, average basket value for an online shop needed to be at about £80 for it to actually, for a retailer to even kind of cover costs. So I think that what we're seeing now is that the distribution of spend across different channels within grocery has changed. There's a lot more that's going through online. There's less top-up shopping because we're commuting less, and that area has been under pressure. But generally, behaviours have changed. I think that just as we've seen a huge impact of digital across non-food, arguably the impact has been even more so across not just grocery, but across casual dining. So we've seen Deliveroo, Uber Eats, Just Eat, provide almost frictionless access to restaurants. I think an interesting space around that kind of overlaps that rapid delivery of grocery and also what's Deliveroo, Uber Eats, Just Eat are doing within casual dining is whether or not the grocers will enter that space of enter the takeaway space. The takeaway market is a huge market, and whether or not the grocery sector will decide to see this as an opportunity, another route to market. We've seen some trials, for example, of Asda partnering with Just Eat to deliver hot pizzas to people's front doors. Whether or not there will be kind of significant moves in this area to try to almost commoditize, to provide a discount offer within the takeaway space, where a retailer like Tesco, for example, has enough space. They've got the density of stores. They've got huge buying power. And of course, the takeaway market has infinitely larger margins than the grocery sector. So teaming up with the right players, that could be an opportunity there as well.
Yeah, excellent. And of course, I wonder whether this might be the moment when we see some non-food players seeing benefits through rapid delivery. It's an area that has had a few false starts over the years, but I wonder whether if consumer expectation is growing, if drop density, which is a key component of the base cost, is getting bigger, then just potentially I wonder whether some, maybe apparel, but maybe other non-food sectors might dive in. Right, we're running out of time, Rich. I've got two questions for you, which I'd encourage brief answers to. The first one is, and we've had a few requests for this in different forms, but if you could just whip out your crystal ball and tell me, what do you think the top 3 changes will be in the next few years? What are the earthquakes we're going to see?
I think we will see, that continuation towards the shift towards online. And I think, if we're going to try to kind of wrap that up in 3 trends, I think that, I think the industry will go through a period of more consolidation and partnerships. I think that retailers will be really driving towards scale. Online is all about economies of scale and trying to make that business model work. So retailers will be looking at different ways to achieve that. So whether that's through consolidation, merger and acquisition, forming partnerships inside and outside retail, I think that's one interesting area. I think another one is that it will be inevitable that we will see fewer stores. We did a piece of work before the pandemic, which estimated there's about 20% too many stores, given the level of online sales, and that 20% will come out of the market in about 10 years. That 20% is probably a little bit higher. That 10% is probably a little bit shorter.
Great. Do you want to name the retailers that are going to go bust then?
Yeah, I'll kind of skillfully avoid that by moving on to my third point, which is I think we'll see big change around supply chain and logistics, and I think a lot of that will be driven by technology. And actually, can I cheekily add a fourth point, which I think I do genuinely believe that direct to consumer will be increasingly disruptive to the kind of ordinary affairs of retailers.
Yeah, I think direct to consumer is a big deal and deserves a lot more attention. So my final question comes from Mr. Lim. Could you tell us why you should sign up for the free trial of the Retail Economics Service?
Thank you, Stephen. There is a free trial link in the chat, but please do. Put it really simply, being completely honest, it's our opportunity to show you what we do. You have access to our reports for a limited time. Get your teeth into all of our insight, all of our proprietary data, and see what you think about it. And of course, I'll be delighted to have a conversation to see how we might be able to help.
Thanks, Rich. That was excellent. Very, very helpful.
Thank you, Stephen. Thank you, everyone, for dialing in.